Joining us this morning to talk about the challenges businesses are facing right now is Cameron Lewis. Well, let's jump in. In your perspective, what are the biggest economic challenges local businesses are facing right now?
Number one, I would say, is labor shortages. It just seems like it is harder to find workers right now. And that goes into the second part is wage pressures, where wages are going up, which then in turn means less profit for the business. And it might just cost you a little bit more money to get that employee to come in the doors and work with you. And then the third thing I would say is whether you rent or you own, rents are on the rise from a lease perspective. And then if you own your building or you're a landlord, let's just say, property taxes and insurance are on a upward trend, let's just say.
Yes. How are rising interest rates or inflation impacting the way businesses borrow or grow?
Yeah, so essentially higher interest rates just essentially means the cost of funds that it takes to grow or expand your business just costs you more money. As we've seen in the last 4 years or so, it's just been extremely different than what we were used to in the years past.
Sure.
And then from an inflation perspective, it seems like everything's pretty stagnant right now, but the costs are still higher than they were, let's just say, pre-2020, 21-ish. So it still costs more than it did before, which tightens your cash, essentially.
Right. Have you seen any shifts in how easy or difficult it is for small businesses to access credit or get loans in this environment?
Yes. So the term I'll use for that is credit tightening. It just essentially means banks are tightening their belt on what they want to do.
Right.
Some banks focus on more real estate versus small business loans or vice versa. So you just got to essentially find a bank that wants to do the loan.
Okay.
So,
and what are common financial missteps that businesses should be aware or avoid right now?
number one, I would say, is don't overextend yourself. You just want to make sure that you're only borrowing what you can, and you just don't want to borrow too much and then you can't pay it back. Just like on the personal side, like when you're buying a house or buying a new car or et cetera. And then you also don't want to over leverage yourself, which just means pledge too many assets or pledge too much cash into a project, and then you have nothing left over.
Yeah, so I assume that businesses are taking a more cautious approach to borrowing.
Yeah.
But are they still investing in growth?
Yeah, so I would say when the interest rates first started to come up, everything got slower, which is pretty natural. And I think that's the whole point of the interest rate increase. Now they're trending downward. So I think people are more apt to borrow money right now. And it has picked up quite a bit in the last couple of years than it was in the previous couple.
So we talked about missteps, but what are some things local businesses should do if they're looking to borrow?
What they should do is contact their local financial institution, preferably Farmers State Bank, and just see what that process looks like. If you never borrowed money before, if you have, just get financials and all that good stuff rounded up. So that way we kind of know what to look for right away and go from there.
And how could people get in contact with Farmers State Bank?
Yeah. Social media.
Yes.
Direct line is 319-377-4891. And email, Facebook, so on and so forth.
All of that information is on my fsbonline.com too.
Yep.
You can find all of that. Well, thank you, Cameron.
You bet. It was good being here again.